We are technically an open-end company and practically a closed-end company. Let me explain that. We are registered under the Investment Company Act of 1940 as an open-end company, which means that we are contractually obliged to repurchase shares at any time at the net asset value when presented to us. However, no such shares have been presented to us for a great many years. Our shares have sold consistently at well over their net asset value. Furthermore, we have not sold any shares of stock to the public at any time and have not increased our capitalisation for many years, so that we operate actually as a closed-end company, namely with a fixed capitalisation. The Chairman: what is the capital? Are these trade secrets or not? Mr. Graham: not at all. They would not be a secret in any case, Senator. But as it happens, our figures are made public. They are filed with the Securities and Exchange Commission. We have 5,000 shares of stock with present asset value in the order of 1,100 a share, and with a market price rather considerably above that. The Chairman: a market price above that? Mr. Graham: that's right. The Chairman: but the shares sell very seldom, I understand. Mr. Graham: that is true. They are very infrequent sales. Nonetheless, there are quite a number of them in the course of a year or two. The Chairman: when was your company started? Mr. Graham: the company was incorporated in 1936, but it was a continuation of a business which was set up in 1926. The Chairman: to what do you attribute your great success in this business? Mr. Graham: well, Senator, that is assuming that we have made a great success. The Chairman: would you not consider it a success? Mr. Graham: I will admit that we think it is, but I did not want to be in the position of passing over your question as taking for granted that we have made a great success. The Chairman: I will take responsibility for saying you obviously have made a success. Mr. Graham: I think our success is due to having established sound principles of purchase and sale of securities and having followed them consistently through all kinds of markets. The Chairman: I take it that ordinary members of the public cannot buy your shares, is that right? Mr. Graham: well, they cannot buy them in unlimited amounts, but they can buy them over the counter in small amounts. The Chairman: are they quoted over the counter? Mr. Graham: they are quoted over the counter, yes, sir. I would say probably around 1,250 or 1,300 a share now. The Chairman: above the asset value? Mr. Graham: that is correct, sir. The Chairman: is it customary for open-end companies to be selling above their asset value? Mr. Graham: well, it is unusual for any investment company to sell above its assets value, but there are a number of instances. The best known instances is the Lehman Corp, for which a good part of the time sells above its asset value. That, however, is a closed-end company. It is impossible for an open-end company to sell at more than the selling premium over its asset value as long as it offers shares of stock to the public. That is obvious. In some instances, a company like State Street Investments has followed a policy like ours and has not offered shares generally to the public, and the shares have sold at a premium. The Chairman: do you personally control your company? Mr. Graham: no, I am a comparatively small stockholder. The Chairman: you are? Mr. Graham: yes, sir. The Chairman: does your family control it? Mr. Graham: no, we have a comparatively small number of shares. The Chairman: does any one family or person control it, or it is distributed rather evenly? Mr. Graham: the shares are distributed fairly evenly. I would say it is a family with whom we have no relationship that represents the largest holding of the present time. The Chairman: if someone wishes to sell their shares, they still can demand what from you? Mr. Graham: they can demand the net asset value. The Chairman: which of course they do not do because they can get more. Mr. Graham: that is correct. We have not taken in any shares for many years. The Chairman: what inspired you to form an investment company? You did start this investment company, did you not? Mr. Graham: yes. I may say that I entered the brokerage business in 1914 and became a junior member of a stock exchange firm, and in 1923 I believed that sound investing principles would be successful, and I started a private fund in 1923 which was changed around in 1926. A private fund would be one in which no offering was made to the general public through advertisements, circulars, or in any other way, but merely to friends who were permitted and asked to contribute. The Chairman: how large was that company? Mr. Graham: it was about $500,000 at the beginning. The chairman: just you and your friends? Mr. Graham: that is correct, sir. My own participation was very small. I had very little money. The chairman: you started buying stock, is that right? Mr. Graham: stocks and bonds, yes. The chairman: I would be interested, if you do not mind telling us, to have the history of this development. However, I do not wish to embarrass you. If you think it puts you to a disadvantage with competitors or anyone else, you do not have to. Mr. Graham: no, Senator. I have been accused of telling all my secrets. I have written a number of books, and I reveal them all in these books. The chairman: I was particularly interested to know what happened to you in 1932. Mr. Graham: we had a rough going. The chairman: you first started at the beginning with $500,000. What happened until 1929? Mr. Graham: we were quite successful, and the fund grew to $2.5 million at the beginning of 1929. The chairman: in stocks, I take it? Mr. Graham: in stocks and bonds. What did you do in 1929? Mr. Graham: in 1929 we lost money. The chairman: well, a lot? Did you go down with the market, or see it coming, or what? Mr. Graham: we did pretty well in 1929 alone, but the real difficulty we experienced in 1930 and 1931, when the market went much further downward than we had anticipated. We had pretty well anticipated the 1929 decline, and so our resources were shrunk pretty much. I do not think they shrunk as much as General Wood's pension fund did, which we mentioned before, but they went down fairly low, and it was not until 1936 that a person who had been with us in 1929 and had held on would find himself even, but by 1936 he was even in our business. The chairman: you say you changed. When did it become a registered investment company? Mr. Graham: it became a registered investment company in 1941 after the passage of the Investment Company Act. The chairman: what happened in 1936? Did not some change occur? Mr. Graham: we incorporated for a very peculiar reason. We had originally operated as a joint account, and the individual members reported on a partnership basis. The chairman: each participant in the fund, Mr. Graham: that is correct, reported his share of the results. But before 1936, the Treasury claimed that we were an association taxable as a corporation, and we had considerable problems as to where we stood, whether we were or were not a corporation. So our counsel said, you had better incorporate and settle this matter once and for all, because the Treasury will get you either way. The chairman: this was the original group of friends, is that right? Mr. Graham: that is correct. The chairman: that is all you were in 1936? Mr. Graham: there were accretions on a private business. I had more friends in 1936 than I had in 1923. The chairman: when did you make them? During the Depression? Mr. Graham: not so many as afterwards. The chairman: you incorporated in 1936, and in 1941 you registered. When did you sell any stock to the public, or did you ever sell any? You have 5,000 shares, you say. Mr. Graham: yes. May I say that we originally had more shares, that is, we sold stock up to 50,000 shares with a normal par value and stated value of $100 a share. The chairman: when did you do that? Mr. Graham: well, we did that in series by offering rights primarily to our older stockholders, and that built our capital up to $5 million, consisting of 50,000 shares worth about $100 a share. But we discovered, and this may interest you, Senator, that we were beginning to get a great many one-share stockholders, people we had never heard of, who came in and invested $100 and then got our reports and found out what we were doing and imitated it. So to deal with that situation, we perpetrated a reverse split-up in which we issued one share for 10, increased the unit value in the market to about 1,200 or 1,300 a share, and from that time on, we did not get quite so many one-share stockholders. The chairman: what do you charge for managing the investment company? You are the manager of the company, is that right? Mr. Graham: I am one of 3 managers. The other 2 managers are Mr. Jerome A. Newman, who has been a partner of mine since 1927, and his son, Mr. Howard A. Newman.